Hi everyone, hope you're all doing well. Today I'm going to do my US stock market portfolio update for you guys. So this is my personal portfolio and I'm going to show you how it's all doing. Obviously, been a fantastic year. I think we're up about 50% year to date, and what you'll see is some of my stocks that I was buying a few years ago have really flowered and we've got really significant returns from them, and especially like the large positions as well. You know, a lot of them have gone on to perform 100, 200, 300, 400, 500, even some of them 1,000% returns, and that's really helped us to beat the market. And then what you'll also see now is kind of what I'm placing as my new stocks and hoping that these stocks that I'm buying now will then enter when we come back in 2027, 2028. They're the next new blood to kind of take us up to the next level where we get the returns. So I'll kind of spend a minute or two in every position and where I'm at with everything. So I hope that is all okay for you guys. Just a shout out before we do, if you do want to join the private group, it is currently the Black Friday sale. This is going to be running to the 1st of December. If you do want to get access, send me an email, jkiinvesting@gmail.com. It is £44 for the full year. You get access to the Discord, 600 members to talk about stocks, including me. Oh, all the exclusive content. There's 100 exclusive videos on there every year. And you can see, if I just scroll down, you can see in the last 24 hours, we've done a review of DraftKings earnings, a review of AMD's earnings, a review of Zotefoams, Watches Switzerland, and Barrett Redrow's earnings. And there's plenty more videos coming your way as well. So if you do want to get access to that, no more live buy and sell alerts, then send me an email. All the exclusive content is under the tab JKR posts, and this is your best time. This is the cheapest it'll ever be. I don't do a deal cheaper than this. It's so cheap that I actually don't do the deal through Patreon because they don't allow it to be so cheap. It does mean you don't get access to Patreon directly, but you don't lose any features. You know, everything's there on the Discord for you guys. So we're going to go through the two portfolios here. The reason why I have two portfolios is just the way I've got to do it, because I've got two separate broker accounts that I use. One that I've used for a while before Trading 212 was a thing, and also that I like to sometimes spread my money across two different platforms, just that if anything was to go wrong, I wouldn't lose all my wealth, because a good significant amount of my money's in the stock market. So yeah, just a bit of protection there. So we'll go through the smaller portfolio and then we'll go through the larger one. So in this one here, we've got Alibaba that's up 61%. It's been a good performance this year. Not often Chinese stocks perform absolutely amazing, but they have done this year. Did sell half my position out a couple of weeks ago. Stock's fallen a little bit since then, but holding the rest just in case Alibaba ends up what sounds like the cloud business and the AI investments they're making. You know, if China go, we don't want any US companies really having the China market from that point of view. We'll let Alibaba benefit from it. So if that does happen, that's why I still own a lot of my Alibaba shares. AMD were up 132% up in this account here, and yeah, what a performance this has been. I'm so glad this was my stock I really bought heavy in the last 12 months. I didn't think it would perform this well, this quickly, and I didn't even think we would see such a drop as what we did see in April. But all of it has just lined up absolutely perfect, and we've really benefited from that. Benefited from it a lot quicker than what I thought I thought we would, and it sets up for a potential of a really good 2026, 2027, because when you start seeing that OpenAI partnership kick in, and the new chips come out, the MI450. It could be exciting to see where AMD goes to, and I think then we start talking about AMD then coming on to being a $300, $400 stock, and then from that point of view, for me, AMD comes a stock I'm up 200, 300% on. So yeah, should be exciting. Amazon. Oh, by the way, all these stock prices are taken from Tuesday. I thought I was going to do this video on Wednesday, and then some stock news happened. I can't remember what I ended up covering on Wednesday. You guys probably know. It's been such a busy week, I can't remember. So I ended up knocking it back. So just bear that in mind when you look at some of the stock prices here, that they are taken from Tuesday, not from today. Amazon were up 34% on. Yeah, I mean, they brought out earnings. The market seems to love earnings, and I just wished I had more of it, to be honest with you. But yeah, big fan of Amazon. Meta up 274% on Meta, and I'm not going to lie, Meta is interesting right now. The stock since around August time has had about a 20% pullback, and whenever you get those 20% dips on those Mag 7, there always come interesting opportunities to buy. But the thing with Meta is it was always not too badly valued even when it was at 52-week highs. And Meta's always never been loved like the other Mag 7 stocks. It's been always the ugly duckling that just doesn't get the love. And even though it's outgrowing all the other Mag 7 stocks, apart from Nvidia, it still throws it down to the cheapest valuation. And I'm looking at Meta right now at 24 times earnings, and I'm thinking, yeah, you know what? That is a little bit interesting on Meta. And yeah, I could see myself buying. We'll see what happens there. Yeah, we're down 81% on. That doesn't include special dividends. If we did include special dividends, we wouldn't be down that much. We'd still be down, but not that much. I still think there's something there with yeah. If they can keep doing that advertising business, I think they could still do okay. Just being a bit unlucky with that one because just so many things went wrong. I think it was like 3 or 4 things all at the same time. So you just sometimes can't forecast that. But yeah, I'm still holding at the moment. Microsoft are up with 361% on. That's been a very good performer for us. Google are up 86% on. Yeah, Google, what a year this has been. Google has come my example of like the stock market can be stupid because the stock market threw Google to 16 forward times earnings for the best company in the public markets with one of the best balance sheets there, with one of the best businesses, the most diverse businesses, all the future things they have going for them. And the market threw it to 16 forward times earnings because they thought it was dead because of AI. If you ever wanted to know how stupid the market can get, Google is your example. Stupid value. And I bought that dip and I bought it and I bought it. And I wish I got it to my biggest, largest position. I've got it to my third one, so I'm not totally disappointed. But yeah, it was a gift. We've had a few gifts this year. We talked about AMD being a gift, and obviously Google was a gift this year. So, even when you have very good years in the market, you can still always find those opportunities. And sometimes the market can be absolutely stupid. And actually, there's a stock. I think we've got Google 2.0 as well somewhere around here, and I'll show you that one a little bit later on, to be fair, when we get a bit further in the video. Visa up 111% on. I love Visa. S&P 600 ETF, the only ETF I hold, which is up 16%. And then we'll shift across to the other portfolio. So here, VF Corp, bit of a small position. I am being very careful building this one up because it is a turnaround play, but I'm surprised the market sold it off to the last earnings. I thought the turnaround was clearly going on even more, and the market went, nah, we're going to sell you off. And I thought, okay. So I've been buying a little bit of VF Corp slowly and making sure that turnaround still continues to carry on inside the business. We've got some Adobe. So when I told you about Google 2.0, I believe that's Adobe right now. Adobe, yeah, cracking, absolute amazing business here. People are saying it's going to get disrupted by AI, Google 2.0, and they've gone, nah, we just beat on EPS, we beat on revenue. We actually think AI is helping our business, and that's why we're hiking up our guidance. The market is just totally ignoring it, even though it's done it for a few quarters in a row now. And you're getting, once again, one of the best companies in the stock market at 15 forward times earnings. In fact, not even 15 forward times earnings, because Adobe, their financial year ends in November. So literally 2-3 weeks time, as long as that last Q4 update is decent, which I think it should be considering the heights of the guidance in September. Considering that, realistically, we can assume right now Adobe is 15 times earnings. 15 times earnings for Adobe right now. And they're a company growing 10% a year. The profits growing even slightly faster than that. They've got the share buyback going on. Really good balance sheet. One of the best companies in the world at 15 forward times earnings. You wanted Google 2.0? There's your Google 2.0. I mean, Adobe should not go lower than 20 times earnings. And that's in like a full-blown crash. And we're at 15. Now, Adobe is a premium company. This should be a premium valuation. The stock market's trading like 30 times earnings. And Adobe's 15. Like, Adobe should be between 25 to 30 times earnings, which is nearly double from where it is right now. So, yeah, that's one of the stocks I'm really hoping is a good performer for us in the next few years, and one that I'm buying in quite a bit. It is probably like my 9th biggest position. But for it to get to 9th to 5th isn't like a major increase. And I do think Adobe will cross the end of the year as a top 5 position. And if we get to probably about midpoint next year and Adobe's still doing this and it's at these levels, and we're on the verge of 14 forward times earnings, that's where Adobe will then come a top 3 position. And if we end 2026 at these levels, I'll tell you now, I actually think Adobe would come my largest position, but we'll see where we're at in 12 months. But that's where I'm at with Adobe overall. AMD 104% up in this account. Amazon were up 45%. Didn't buy as many shares as Amazon in this account. Google were up 100% on this one in here. DraftKings were up about 4%. I think after the last couple of days moves, I think I'm about break even on DraftKings, I'll be honest with you. Yeah, I've literally just covered my current thoughts on DraftKings on that Patreon video. So yeah, I won't cover it any more than that, because if you want my thoughts on it, you can go watch that video there where I'm at with DraftKings. dLocal, they report earnings this week, so I don't want to say too much, but 14 times earnings for dLocal, and I'm surprised it's only up 16% considering the financials that they've done this year, and 21 forward times earnings, 16 times 2026 numbers. It's not too bad at all. I guess you just got to manage the currency risk over there, but it doesn't look terrible value, but don't say too much because they're reporting. Enphase, we're down 49% on. I'm really surprised, to be fair, Enphase is down this much because, like I said, they're another company that have basically had everything that could go wrong for them with the tariffs and the Inflation Reduction Act credits getting shut off and how slow the interest rate cuts have happened to them. I actually think the financials have been really good considering all that, and a little bit unlucky to be down 49%. So I don't want to buy too much more because I want to make sure they still manage the next few months with all the things that have been hitting them, doesn't start affecting them. But if I get into 2026 and I see them doing okay and then the interest rate cuts actually start helping them, I would be quite happy to probably increase that position. So we'll see. EHang, we're down 22% on. That's the spec play into the drone space I bought a few years ago. And I've got to say, I think this one should be up a lot more. Like, you look at the financials they've been doing and you look at the products that they have and the flying passenger drones they have compared to competitors. And competitors' companies' market caps are like 5-10 times the size of EHang. It's like, how are they 5-10 times the size of EHang when EHang's the actually one that's got a product that works and is selling? So that's ridiculous. So it is what it is. Market being stupid. Gambler.com, we're down 38% on. I actually think their earnings have been okay as well, but they're reporting this week, so I'll see what they say, and then if it's a good earnings report, I'll buy, and then if it's okay, I might just continue to hold. So we'll see what happens there. Meta, we talked about earlier with the shares that I have in the other account. So it's up 142% in here. Top Golf, they actually brought earnings out and they were okay. Well, they still need a lot of improvement, but they stepped in the right direction a little bit. Hims and Hers, so we're only up 315% on this. Obviously, you guys know I've been doing a bit of averaging up this year when we had the dip earlier on. So I used to be up 1,000% on Hims and Hers, but when they started dipping a bit earlier in the year, I started buying and it's put my average up a little bit at the moment. And like I said, I'm not too bored about like showing you guys like pretty big numbers, like, oh, I'm up 1,000%. I can do that if I want, but you know, I want to sell courses, so I'm up 1,000%. I don't do that. For me, my main priority is making money in the stock market. I make more money from the stock market, buying and selling, than I do from anything from my YouTube, my Patreon. So that's always my priority. So it is what it is. I could make it look a little bit prettier with all these, you know, big percentage returns, but if I see a chance to make money and it might lower my average down and the percentage looks a bit low, whatever, I'm more bothered about making the money ultimately. And you know, with Hims and Hers, I said to you guys a couple of weeks ago, a couple of months ago even, during this time period, I said, I think it's going to have a pullback. You know, I think there's a lot of hype investors in here. The revenue growth rates are going to slow down a little bit. And I think there's a lot of people in here because of that. And I think when that happens, you're going to see a few people that have been chasing the hype jump out. And that seems to have happened with Hims and Hers because we've had that kind of, you know, 30% pullback now. But now it's happened. Look at Hims and Hers. The last financial update was actually a little bit better than what I thought it was going to be. 52 forward times earnings. It's not too bad. Not too bad. And I think they'll beat that as well, knowing Hims and Hers. So I could actively start just increasing that position a little bit in Hims and Hers at the moment. So we'll see what happens there. InMode, I actually like InMode at the moment. I've not bought for such a long time, and I'm looking and thinking the interest rates are coming. They look like they're starting to just step up in that direction a little bit now, in the right direction. Revenue growth going back. EPS looking a bit stable on the future quarters here. When I see a decent quarter from these guys, I'm going to actively be buying in mode, and it looks like we might be only 2 months off that happening, so keep an eye on that one there. Planet 13, that's a bit of a spec player bought into the MJ space, although it hasn't done that well recently. Monday.com, I'm not going to say too much because they report earnings on Monday. What a day to report on. That's what I expect from Monday.com. Imagine if they reported on a Friday. It's just not happening, is it? Mercado Libre. So, yeah, I mean, I was talking about the stocks I'm buying the other day about Mercado Libre, and I was saying, like, literally, whenever you get a 20% drop on Mercado Libre, you buy it. And that's what I did. And then the stock bounced up, and I thought, it's all gone away now. And out of nowhere, the last few days, there's been so many stocks in the last few days that pull back significant amounts. And that's happened again with Mercado Libre, and that's put it back down to nearly a 20% drop. And all of a sudden, you got Mercado Libre, one of the best companies in the stock market, 34 forward times earnings. Oh, that company's going to trade about 60 times earnings normally. So if that grows into that 34 times earnings in 12 months' time, I think you could see double the share price there. So watch that one. That's an interesting one massively. So far, yeah, that's been a great performer for us. New Holdings, they report this week. Shark Ninja, I think about break even on that one now after the jump after earnings. Really good earnings. I'm going to cover that on the Patreon a little bit later on, but solid numbers from Shark Ninja there. So yeah, I like that one. Shift4 Payments, I'll cover that one on the Patreon for you guys and their earnings. But they were, once again, they were solid earnings as well. So I like that one there. Shopify were up 121% on. Evo is actually probably the stock I'm least confident on right now in my portfolio, which I would not have expected to say if last year. But there's been a lot of things going wrong with that business, and I'm looking now, and I'm down about 30%. I got about 5% dividend off it, so if you include that in, I'm about 25% down. And the next dividend comes in. I think they only pay it once annually, which I think is about March, April time, which is about 3-4 months away. And I'm not going to lie, if in the next 3-4 months those financial updates don't improve and they don't get control of what's happening with the Asia part of the business and the hijacking that's going on, and I get that another 5% dividend in, and then I'm only going to take about a 20% loss on Evolution, I might consider it, because that is, like I said, that for me at the moment, that is the stock in my whole portfolio that I'm the most concerned about. So we'll watch that one. PayPal were up about 2% on. Yeah, this is another one. This is one of the new bloods into the portfolio. Previously that owned it, made really good money off it. Buying again, I think the latest financials were fantastic. And 13 times earnings for this one. Yeah, I like this one. This is one that I'm really actively buying and could make a larger position, to be fair. And then we're back around again. So yeah, overall you can see here, like the old dogs of the portfolio have really lifted us the last few years. Whether you look at the likes of the Google, the AMD, well, I guess AMD is a bit more of a new one, to be fair. Google, Meta, SoFi, Hims and Hers, Mercado Libre, Shopify, Visa, Microsoft, Meta. Yeah, they've all done really well for us. And so we've got the new blood coming in now. The new blood being the likes of the Adobes, the PayPals, the Shift4 Payments, the Monday.coms. And then whenever the opportunity is there, is adding to the opportunities like Mercado Libre still, and potentially like the likes of Meta, for example, and Hims and Hers. There's always the opportunity to add into them on weaknesses when it does come up. Where winners keep winning and all that. So yeah, it's exciting. Yeah, I'm really happy with how the portfolio's done. I think you can see it's been a great performer for us, and yeah, just continue adding in. Probably there's not any stocks that are close to being trims at the moment, because obviously we've been locking in profit as the year's gone on, as from the likes of AMD and Google, DraftKings. We're surprising now, but we were locking profit in DraftKings it's not too long ago. The likes of Hims and Hers, SoFi. Because of the pullback now that we've been on the last couple of weeks, it's probably not too much that I'm going to look to trim at the moment, but we have locked in profit over the last few weeks, and then this is probably more of a time where I add back into the portfolio. And yeah, there's certainly a few things that I would be looking to buy at the moment, which is always good to see. So yeah, that's where everything is at. So that's the portfolio update for you guys. Next time I update you guys on YouTube will be February 2026, which is absolutely crazy to say, because I do it every 3 months on the YouTube. So if you do want to see a more monthly update, I do that on the private group for you guys. So yeah, if you do want to sign up on the Black Friday deal, obviously that's one of the benefits as well on there, is that you do get more of a monthly update rather than the 3 months update. But apart from that, I hope it was all useful, and I'll see you all in a bit.